In other news now, a stronger than expected economy appears to be giving the Bank of Korea room to tighten its monetary policy. In fact, policymakers there have raised their key interest rate for the second month in a row by 25 basis points to 3%. Our correspondent Kim Jun-hong reports.
The Bank of Korea has raised its key interest rate by 0.25 percentage points to 3%. Thursday's move comes with 6 of 7 Monetary Policy Board members voting for an increase, with 1 backing a hold. This marks the second consecutive hike after last month's quarter-point increase, bringing the rate above 3% for the first time in 1 year and 9 months. The central bank has put greater weight on early action as chip-driven growth adds to price pressures, with inflation remaining above its 2% target.
Early monetary policy action is essential to maintain macroeconomic stability. Research shows acting early can anchor inflation expectations sooner and reduce the scale and duration of tightening while easing the impact on growth.
The governor said the timing and pace of further hikes will depend on inflation and growth. The 6-month-ahead rate projection also points to further tightening, with projections reaching up to 3.5%.
I expect the rate to reach as high as 3.5% by next year. The Monetary Policy Committee appears strongly inclined toward further tightening, but with no 3.75% projection in the dot plot and a dissenting vote today, there is also caution against raising rates too quickly.
The BOK also updated its economic outlook, lifting this year's growth forecast to 3.3% from 2.6%. The upgrade reflects a strong chip cycle and its broader economic impact, despite continued uncertainty from the Middle East war. Next year's forecast was also raised by 0.8 percentage points from the May estimate. Meanwhile, the inflation forecast for this year was kept unchanged at 2.7%. Yet core inflation, closely watched by the BOK, is forecast to remain elevated at 2.5% both this year and the next. Governor Kim Jun-hong stressed the need for action before inflationary pressures spread further. The central bank's unusual second straight hike signals a continued focus on inflation amid a 3.3% growth outlook. Kim Jun-hong, ArirangNews.